River didn't explode because of hype. It exploded because capital moved. While Bitcoin was bleeding, liquidity didn't leave crypto. It rotated. And River was sitting exactly where that rotation needed a home. On the surface, today didn't make sense. Bitcoin was red. Sentiment was weak. Most traders were cautious. Yet one small market did the opposite. River surged violently while the rest of the market struggled. To most people, that looks random. It isn't. Let's slow this down. River isn't a meme, and it isn't a large liquid blue chip asset either. It's a thin market. That matters more than anything else. Thin markets don't need massive demand to move. They need just enough capital at the right time. River sits in a category where liquidity is limited. Order books are shallow. Supply isn't evenly distributed. That makes price extremely sensitive to flows. Here's the key idea most people miss. When Bitcoin bleeds, capital doesn't automatically exit crypto. Sometimes it just stops being productive in Bitcoin. Large traders reduce risk. They don't panic. They reposition. And when Bitcoin stalls, they look for places where smaller capital can move, price momentum can form quickly. Attention hasn't arrived yet. That's where assets like River come in. Think of the market like water. When pressure builds in one area, water looks for the easiest path. Bitcoin was crowded. Leverage was high. Upside was capped short-term. So capital rotated out of Bitcoin risk and into small, underpositioned markets. Not because River is special, but because it was empty. Empty markets move fast. River didn't explode because demand was huge. It exploded because liquidity was thin. In small markets, a few large orders can wipe out sell walls. Price jumps aggressively. Momentum traders pile in late. Algorithms chase volatility. What looks like a pump is often just structure doing what structure does. This is mechanical, not emotional. Most traders look at headlines, narratives, social media. By the time those show up, the move is already done. River moved before attention. That's the real lesson here. Markets don't wait for permission. They move where positioning allows them to move. Now the important part. The same structure that creates fast upside creates fast downside. Thin liquidity works both ways. When rotation leaves, price can fall just as violently. This isn't a buy and forget environment. It's a flow-driven environment. Understanding that difference is what separates professionals from gamblers. This move wasn't about River, it was about market behavior. It showed capital is still active. Liquidity is rotating, not leaving. Small markets are being used as pressure valves. That's a healthy market behavior, even if price action looks messy. So no, River didn't explode because of hype. It exploded because Bitcoin stalled. Capital rotated, liquidity was thin. Structure allowed it. If you understand that, you stop chasing moves, and you start seeing them form.